Morning, everybody. It's at 8:11 a.m. Welcome to my channel. Yesterday, we were barcoding a little bit, and then tensions were getting higher. Like the U.S. might join forces there. Sent the market down a little bit. Recovered a little bit now. But today's a big day, FOMC. No one's expecting any changes. So I don't think the FOMC statement might have much to say. However, obviously, the press conference following is usually where there's some nuggets, maybe. And generally, I tend to stick around for like the first hour or so, and then pretty much take the rest of the day off. I don't have much of an edge when FOMC comes out. And then, yes, tomorrow. Now, that's the thing. There won't even be a tomorrow to see what the follow through is because tomorrow's the stock market's closed. So you have to wait till Friday, which is just a weird week, right? FOMC, and then it's markets are closed. So we'll have to see what transpires. So basically, that's a day off, and we'll have to see on Friday. Now, my only guess could be possibly we could see some serious low volume on Friday, and again, Friday's quad witching, so futures contracts are rolling over. There's a lot of stuff going on with the holiday, with FOMC, so it's a kind of a crazy week. All right, all right. Without further ado, let's get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That's my edge. It's the way I look at structure in the markets and gives me a game plan to go off of. Okay, I also use anchor VWAPs in the market internals to see what's going on under the hood of the markets. All right. Now, if you're new, hopefully you can sign up, give you the market story, join me every morning, and I give you why the market is doing what it's doing. The market story, the leaders and the laggards, news, economic calendar, daily charts, and we go over a whole bunch of technical analysis later on, including my ES and NASDAQ long futures analysis, which I give long and short trade scenarios. Okay. Once the market's open, right, I look at my market internals, and if you join my Discord, Confluence Trading, you'll get my live analysis there. All right, go to your YouTube homepage, join. All right. So, with that being said, let's get right into futures. All right. So, this morning, bonds, 30-year bonds, seem to be prior to FOMC. Remember, things are going to be a little muted because of the FOMC coming out today. All right. So 30 bonds up 3.30, Nasdaq's up 0.24, crude's up 0.23, silver's up 0.17, ES up 0.15, Bitcoin's up 0.15. There's a lot of muted action here. Russell's up 0.11, the Dow's up 0.10, gold's down 0.12, dollar's down 0.22, 10-year yield down a half a percentage. Interesting. Ethereum down 0.67, and the VIX is down 2.08%, but the VIX is at 21. So that geopolitical stuff that's going on is definitely affecting that VIX. All right. So, but the markets is essentially we bounced up. All right. Right now we're kind of going back to balance, and there's some key levels we're going to get into, and just to show you about the volume profile, market profile, specifically the composite volume profiles that I use. We're going to go and show you just some important levels that just gives you a mindset for myself, how I look at the markets, about what we're doing here at these levels. Okay, let's look at the max 7. AMD's kind of on a tear here. All right, they did on the daily chart close above the 200-day moving average, and they hit 130. 130 is a large gamma level for AMD. So AMD is getting love now. That thing was getting destroyed. I'm glad I DCA'd into that. So again, I'm not a financial advisor. Don't take my financial advice. I'm just saying what I did. All right, now you got that's up 1.57%. Tesla's up 0.58. Netflix up 0.52. Meta's up 0.37. Amazon up 0.36. So a lot of muted action here. The only laggard is Boeing, but it's just down 0.10. It's really not nothing there. All right, let's go straight to sectors. Semis are up half a percentage. Like I said, prior to FOMC, I don't expect big moves. I mean, AMD is doing something there. All right, so we got up almost a half percent. Technology up 0.30. This is all the bounce from yesterday, pretty much de-risking a little bit prior to FOMC. That didn't happen in the real-time trading hours, and there's no laggard, so there's really nothing to speak of, which is not uncommon before an FOMC. Okay, before an FOMC. Let's do our little market internals recaps. Okay, I had a decent trade yesterday, so I had a decent short. So let's look at those market internals. All right. Now the key to yesterday internally. Okay. Now what I've been noticing as of late, obviously we've been in this big balance area, and what I've noticed generally, like when we opened up, the market actually. I want to show you something that's important here. A little divergence here. Okay, so the overall market, that white line, that's with all. That's if all sectors were equal, right? Like there's no market cap, but the market cap is how our market works, right? It was stronger than the market cap. That's actually like bearish, all right? Generally, because you want the market cap always to be leading. That tipped my hat to go, okay, that's interesting. The market cap is weaker than the equal weight, all right? And then the market tried to do some things, right? And then look what happened here. Market caps flipped over. And then you get that weakness. Now, along with this little weakness, which is not much strength here, was I kept hearing in this news feed I have that we're going to join Israel, we're going to have Americans fly over, whatever. And that just started to become negative news with America getting involved. And that's where the market took a little turn. Okay. Now, to show you just really quickly what I did in the SPY, was right around here. I got short. Right there, I got short with a stop loss here. Now, I wasn't that active yesterday in my Discord. Only reason was because my daughter had a rash and I had to take her to the doctor. So I was kind of tending to her. So I was a little muted yesterday. Um, so this was a pretty nice trade. Okay, pretty nice trade. And that just ripped. Now, I didn't get all of this. I got the meat of my risk to reward. I got the meat to this risk to reward. Okay, so that is a positive. All right, that is a positive, and I was waiting for that. And basically, that was part of my plan from yesterday because I said my bias would probably be short. Bias would probably be short, and that came out to fruition. All right. Now we can go to economic calendar, and of course, it's pretty. We all know what's going to happen later on. It's our FOMC. So that FOMC, we're not expecting anything today. Okay, we got building permits, houses. That really doesn't usually matter. You got jobless claims. That hasn't really mattered much. Now, 4.5 is where we're expecting. That's where we were at before. We're not expecting anything. But yeah, the Fed press conference at 2:30. Like I said, I'm probably only going to be around for an hour and change this morning because if there's not a golden setup there, then I know we're probably just going to die into FOMC. Unless there's some news that comes out. Okay? Unless there's some news that comes out. Now, as far as news, let's just get into it. Let's see. I wouldn't think that's big news. Sam Altman says Meta offered 100 million bonuses to OpenAI employees. Goldman Sachs leveraging revamp to boost Asian investment banking share, says regional top banker. Boeing 787's emergency power system likely active before Air India crash. Monopoly maker Hasbro cuts 3% of its total workforce amid higher tariff costs. All right, just here it says the dollar weakened against the Swiss franc as investors sought safe haven assets amid escalating conflict in the Middle East. Oil prices declined as markets assessed the risk of supply disruption stemming from Iran, Israel standoff and considered the possibility of direct U.S. involvement. Gold prices also retreated. Oh, this is interesting. General Mills, the company said on Tuesday, it would remove artificial colors from its U.S. retail portfolio by the end of 2027. The Cheerios maker also said it would remove synthetic dyes from all of its cereals and food served in K-12 schools by summer 2026. General Mills added the change will impact only a small portion of the K-12 portfolio, as nearly all of its school offerings are made without certified colors, while 85% of the U.S. retail portfolio is made without artificial colors. Okay. Like I said, I'm just going to only mention that something here that's important here. Looks like American Airlines got a price target cut from 15 to 14 and then 61 to 60 for Delta. All right. That's about all I'm going to go over here. We'll go to some breadth charts just to see, check in what our markets are doing here. Okay, here's my breadth indicator. Whoa, interesting. Interesting. Okay. So, only 38% of S&P 500 stocks are above their 20-day simple moving average. 38%, right? So, when you come down to here, that's usually you want to get ready to put some money into action, put some risk on, because generally the market bottoms out at these readings. And we're past the 50%, so interesting, right? Interesting. Now, let's look at some of these, okay? We're going to start off with the bullish percent index of our S&P 500. That is 68%. That's gone down a little bit of stocks on buy signals. Okay, if we go to the NDX, that's the NASDAQ 100, 72% are on buy signals still. Now let's go a little more wider to the NYSE exchange. That's only at 58%. If we go a little again, we'll go to the NASDAQ composite. That's 53%. That means half and half buy signals. Okay, so that's like very middling, and that's exactly what our market's been doing. That's exactly what our market's been doing. Now, if we go new highs minus lows, let's see here. Where's this highs? Here we go, right here. You can't get any more in the middle there. Okay, so it's new highs minus new lows, right? That's at a negative 12, which would zero would mean the same amount of stocks are putting in highs as new lows, but it's close to a zero. So this means that's why our market is just in this balancing zone. All this stuff just shows us the breadth is like equal. Okay, the breadth is equal. So very telling. All right, let's look at this Fed Watch tool real quick. Let's look at that Fed Watch. All right, so you can see a 99% chance of a pause. We're not expecting anything to go on here. Nothing. Okay? So remember, 2 o'clock FOMC, 2:30 press conference. I won't be trading. I don't really have an edge there. You know, I usually am walking or I just don't care until the next day. But the next day the market's closed. So interesting, right? All right. I think we're ready for some daily charts here. And let's look at our little SPY. All right. So, in the grand scheme, yesterday, right? It looked like woo, but in the grand scheme, we're just in this balance area. Okay. So yesterday, look, we opened, pushed up, and then fell apart, bounced a little bit, closed here, right? Where are we at now? 598.60. So let's just zoom in this balance here. 598.60. We are right here. Almost the mid of yesterday, which makes sense. Got FOMC coming. Okay. Now let's look at futures. And just, you're in a mess. That is messy. Okay. Hence why I just showed you why the market's doing what it's doing. Okay. Remember those all the breath stuff I just showed you? It just shows you the overall market. Now remember, that's the overall market, right? But it still lines up. But that's why I use market internals. Okay. The market moves by market cap weight in our S&P 500. It doesn't matter if the overall market is strong and the market cap weighted stocks are not. You need the market cap weight to do something to move the market. That's why technology by itself can move the market while the rest of the market is not strong. It's very important to understand that. Okay? Very important. Now, cues. It's a mess as well. All right, we're in this big area of this range. Okay, let's just zoom into this range that we've been in, and opened here, pushed up to here, and closed here. Okay, where are we now? 530.28, 530.28, right here. You're in the middle of yesterday. Horrible trade location. Okay, horrible trade location. So let's look at the futures. You could see the mess. Okay, you could see the mess. I mean, really, from all the way, you could say from all the way back here. Look at that. That's all the way back from June 3rd. This is all we've done. Hence why we're not moving really anywhere. We're not moving. Okay? We have volatility, but we're not really going anywhere. All right? I want to make sure everybody understands that. Okay? And I'll show you some levels that confirms that in a bit. Okay, let's move on to that bond market, that a triple-headed monster here. Let's go right into that bond market, the 10-year yield. And 10-year yield, I want it to keep falling for myself. A couple reasons. I own some 10-year notes, and I added to TLT, so I just want these people to buy some bonds so we can start to get somewhere here and start to move lower. I would like to be able to sell my 10-year notes when yields go lower. So we'll have to see. All right. We'll have to see. All right. That's your 10-year yield. Let's move on to the dollar. Now the dollar, remember what I said, I think it's bottoming out. You got a nice push up. Let's see if we can break this trend. Okay. This is actually last month's lows that we're getting resistance at. Okay, last month's lows. If we really zoom into this whole bottoming out process here, right, that's last month's lows, 20-day simple moving average. Okay, let's see. Could be a nice move eventually. Okay, let's look at the VIX. That's your 30 days out of fear. And I could say we could start from this, and let's zoom. Look, we were really falling apart, and then whoop, volatility just spiked back up, and we're holding in this area. Okay, holding in this area. Eventually, the war will be priced in, or the battle that's going on will be priced in. But for right now, we don't really know for sure. I just saw Iran say today if America is involved in these attacks, they will go after U.S. targets. So that's not good. Okay. So that's your VIX. All right, now we can move over to that hourly chart like I promised you. And let's do that. We're going to look at the ES, and then we'll look at the NASDAQ. And I'm going to show you something, and I'm going to take all the levels off my charts and just show you just the profile, okay? Just the profile. So let's go to hourly charts here. Okay, so I'm going to take off all my drawings. All right, let me do that. All right, and this is just naked chart with my volume profile in profile. Okay, so if I go, oh, this is a 2-hour chart actually, and I zoom like this. Okay, just want to show you guys something here. Let me make it a 4-hour. Okay, so I wanted to show you a naked chart with my volume profile, just how I use it. Okay, how I use it. So this green profile and the white profile are pretty similar, but they're not. Okay, the white is from a year ago. So any time from right now, it's that white profile is from a year ago today. The green profile is from only this year. Okay, but you can see some big levels. The most traded price of the year now, right here. You can see it, 60.65. That is the most traded price of this year. Okay, now this spike right here is the most traded price of the rolling year. Okay, a year ago. Okay, so there is some big levels here. So right here, why is this important, right? You can see, look at this range up here, all-time highs, and we're kind of hanging out at the bottom, close to the bottom of that range. We can't seem to break it, right? So this becomes really a bull bear line. Over it, we probably go towards all-time highs. Accept value under it, we probably go back and test the 58.73. And then you have another high volume node here. You probably go there. If you lose that, no good. Okay. So this volume profile is the volume profile for this year. And basically, it's like a double distribution right here, another distribution here for this year. But this is the monster right here. And we're going to hover around here until we make a decision. Okay. Now I'm going to put this back to hourly chart. And I'm going to put my drawings back. Okay, and we'll zoom in here. All right. So with the levels back on the chart here, you can see the most traded price of this year, right? And you can see we're in this like uptrend here and a little downtrend here. So we're in the middle of nowhere. Okay, we're in the middle of nowhere. And where are we at right now? We're at the month to date anchored VWAP. You see that right here, that line. Equilibrium for the month. That just shows you another balance indicator, right? So we're in indecision until FOMC hits. Okay, but 60.65 is just an important level. Above it, bullish, below it, bearish. Okay, it's pretty much all right there. If you wanted to know a little extra confirmation I had yesterday was when we came up here with these hourly candles, notice it hit the anchored VWAP from these highs. That was my extra confirmation and this supply. All right, wanted to show you that. All right, we can move on to our NASDAQ. I'm going to do the same thing with the NASDAQ. I'm going to do the same thing, but the NASDAQ is even has even some crazy levels here, okay? Not crazy. And we will make this into a 4-hour chart. Okay. As soon as the volume profile hit, okay. And I'm going to take this down. All right, let's take this down. And I'm going to take off my drawings. There we go. And here is the NASDAQ's profile. Big major levels. Okay. So notice the price is right here. That's your it's pretty much, you want to call it 220. It's basically 220, but it's 219.99. I mean, you can call it 220. But right here, you can see it. That's the most traded price of this year. Okay. Notice the spike, right? And that's the price the most traded price of this year. Okay. Now, the other price is 21652 right here. That's the most traded price of the rolling year. And you can notice two spikes here. So we're bouncing around these levels. We're bouncing around these levels. Okay. So that's why we keep going, like, can't go higher, we go lower. Test that area, can't go higher, we go lower and hang out until we have to do something, right? We need to get out of this area. So picture this area like bull bear line here, bull bear line here. And we need to figure out, can we break this to go higher? Can we hit this, go through this? Then it's really can fall. Okay, you see that big vacuum here? That is not, this is from a year ago. That's why there's a high volume node here. But from this year, there's a vacuum. We can cut through that. Now, I don't know what's going to happen. I'm just saying how the market works. Okay. Just wanted to show you without all my levels on the charts why they're so significant. And you can see over to the left here, just so much time has been spent this year. Right. So these are just a double, we call this a double distribution here. And you need to get out of this area. All right. All right. So that's our, let me just get in here and I'll put my drawing objects back. We'll go back to an hourly chart. All right. Once that loads my profiles, okay, and we can zoom in. And real quickly, let me zoom in here. I just wanted to show you this. This is a nice little uptrend here in the NASDAQ. Got a touch, a touch, a touch, a touch. Pretty significant uptrend line, right? And then you got this downtrend line. Okay. So, again, this is the air. This is so much here. Let's zoom in here because there's even more levels. That's what I'm saying. There's so much time spent here. So let's look at this together. Not only the most traded price of the month here, the most traded price of the year here, the most traded price of the week here. This is so much volume here that how I see it right now is this needs to do a lot of work to move higher. It needs to do a lot. It needs to really take out this swing high here, take out this to really move higher, and that's going to be hard to do. Okay. Right now, I would say it's easier for the downside. If we get up in here, boom, fail, push lower, at least go to this big price here, 21650. And then lose that, that's no good. Okay? But right now, I would say the easier path would be lower, but FOMC catalyst can push TA around, okay? So that's your hourly charts. All right? Hopefully that maybe made it clear. I don't know, maybe confuse other people. I hope not. All right, let me fix my workspace here. And we're going to go right into our market profile, volume profile analysis. Okay. So let's look at this market together. Move this to the side. All right, so look at our profile. And what it's showing me is multiple distribution. This is the weekly profile, right? You got extension to the downside, a triple distribution here. Okay. Really look at the value. Value area is here to here. Price is in the middle of value. So we're ready to do something, right? And market really, yeah, you push lower, but now we're coming back into balance. So we're really not anywhere. Okay, price action can always make it seem like, oh my God, this war is making the market fall, but not really. Okay, so that's what we're looking at. Now, as far as today, let's look at it. Let's look at some levels together here. So we have demand here that I think we bounced out of. Right, it kind of lines up the most traded price yesterday. Now, this 24-hour session just actually turned into the most traded price of the week. So there's just so many distributions, you can see them here. So I would say here's a nice level to lean on. Encompasses the overnight lows, most traded price of yesterday, most traded price of the week in the 24-hour session. Like I said, here's the anchored view up to the month right here. It's flat. Notice this is flat. And that's telling you as well. We're just in balance for the month. Okay. Most traded price of the year is right in the smack and the dab in the middle of this range. You want to get away from that to maybe make a decision. Okay. Have a little bit of a poor high here in the overnight. That means that longs had poor location here. But like I said, in the middle of yesterday almost, it's not a lot of great scenarios here. I have to be honest. I'm not in love with a lot of this, like especially before FOMC. So what we do have is a supply zone here, which encompasses that most traded price of the year. Okay, have a little supply here. Not sure. I think that didn't even hold. Okay, got the balance here. This big demand zone down here, which encompasses most traded price of this month, which I believe is like 59.75. Okay, and of course the 6109s about here. You have supply, and again, I don't. We'll have to see. This might all get tested today with FOMC if there's volatility. But just for today, I'm really looking at what's can happen for today. Okay, so why don't we get right into it? Like I said, I'm not liking this at all right now. What I'm seeing, it's not something that makes me excited. That like, ooh, FOMC's coming out and we're like in the middle of balance. Like it's not really exciting. Okay, but I'm just gonna see what would make me interested, possibly. Okay, so I'm gonna start with the long side. Okay, because our price is right here. We're right at the most traded price of the overnight, which makes sense, right? Most traded price of the overnight. So what I'd like to see is maybe a push into this supply, gets rejected, pulls back into the 24-hour most traded price of the week and the most traded price of yesterday. You have a demand zone here. If that holds, possibly get the move up to here. And maybe you can test yesterday's highs. Okay. A little bit of a bear trap could see us push down, break the overnight lows, come into this demand zone, bounce up for FOMC. All right. It's kind of all I'm interested in. Like I said, once the market opens, I'll have to see what else is there. Now, as far as the short side, I think I would lean on the short side a little bit. A little bit. All right, would be maybe a pullback to here. Then it gets that buying, come right into supply zone, right lines up with the most traded price of the year, right here. Okay, try to move higher, rejects. Then you maybe get a move here and maybe move to overnight lows. Okay, this is real compressed scenarios just because I don't feel like we're going to make an outsized move for the morning. Okay, I just don't think we're going to do that. I think we can play with the edges in FOMC, but there's not a lot of edge for me because it's so wild that's why I'm giving these scenarios, because I'm not going to be really involved in that. Okay, that's the ES. All right, let's move over to the Nasdaq. Maybe this gives us a better view. Probably not. Okay, I forgot to open that. Hold on. Let me just show you guys. I'm going to go back to the ES. If you don't know what the market profile is, it's just 30-minute bars. Okay, that's the price action overnight. Okay, I'm not sure if that helped or not, but just wanted to show you that because I'm going to do that in the Nasdaq to make it easier on the eyes. All right, I do see a very big poor high here. Okay, right here you can see that there's multiple longs caught at caught a bad location right there. So we're going to open this up. You can see that. Look at that. 1, 2, 3, 4, 30-minute bars have literally couldn't get higher. So if we make it back up there, I do believe this is a good area where you would probably want to see how high, like a break of that could possibly go higher. Okay, so let's look at some levels here. All right, we're at the most traded price right now of the year in the Nasdaq, which is just a horrible price to be at. I mean, the most traded price of this year. That's how many people have transacted there. So, you know, what I would like to see right off the bat, you got a demand zone right here. Okay, this encapsulates the overnight lows 2186275. Okay, I would be targeting. I would love to get something here before FOMC. So let's see here. So then we have the most traded price of the month here, right up here. Right, we have a poor high as well, like it doesn't have any excess yesterday. And that lines up with the most traded price of the week. Right there. Big levels, bunch of distributions. That's why. See you have all these distributions. Right? One thing I noticed, okay, then we have this big demand zone here. Right? Which encapsulates the most traded price of the rolling year. Okay? What I do notice lately, what's been happening a lot, okay, is the market generally, okay, when the market starts to build volume out, like here, and it should usually move higher. I noticed countless times right here that the market can't break out, and that's just because we're in this choppiness. But it's happened so many times now where I'm generally in a general market where it's not as much indecision. You usually get a nice excess high here. But I've noticed it's just been stopping. And then we go back the other way. So, all right. So let's start with the scenarios here. Like I said, I think I like the Nasdaq's better, but I'm going to start with the bull side. All right. So right at the most traded price of this year. Remember, we have this poor high here. What I would love is a pullback into this demand zone, right? Get a nice push back up, hold the most traded price of the week in the RT in the 24-hour session, and then look to break that 22031 and go try to go up to the yesterday's highs. Correct this poor structure here. All right, right into the most traded price of the week. That would be a nice move prior to FOMC. That's probably my favorite play right there. So I like that. Okay. Probably my favorite play. Even if we do this right off the bat, break this, I'm not a fan for that for longs. Okay. That's why I want that pullback. Get some bears in there, and then boom, make a nice move, and that probably call it a day. Okay. Any pullback in this area. So even if we took out the overnight lows, you have a shot if we get some buying to do this. That's probably it for longs. Okay. Now for shorts, I like this as well for this play. Okay. Because even if we get this move, let's say we open, pull back, break this, but this goes right into the week to day view opposite right here, the most traded price of the month, and supply. There's supply right here. If you get a failure here, like say you wicked here, come back through, you could possibly test the overnight lows, 21862. And then I think you probably go back. That's the play. Because I don't think there's going to be an outsized move. Now, sometimes there is. Now, I don't know what Trump's going to say. I don't know what Netanyahu's going to say. Remember, that's all stuff that can come out. However, if you stay right now that long, have to have probably tight risk on it to get that move. But right now, sellers are slightly in control in structure. Okay, so that's our scenarios. But sellers are slightly in control. You can see lower high, lower high, lower high. And look, lower high. So right now we're trending lower. Now you can say higher low, but there's been a lower low, and lower highs, right? And we're underneath these major distributions. We're right there. That's why I'm saying bears are in control. So that's why I'm saying probably my trade of the day would probably be failure right here to then try to just go to the overnight lows. And I have to see how the market opens up, right? Like I said, sometimes FOMC you get a decent trade, and sometimes it just dies. All right. Anyway, hope you enjoyed that analysis. All right, smash the like button if you did. That would be much appreciated. All right, as always, if you could join me in the mornings, have a cup of coffee, tea, water, whatever your choice of beverage is. Subscribe, set an alert. I do this every day. Give you the market story, give you the lowdown, give you a whole bunch of TA. Just gave you my long and short trade scenarios. Okay? Long and short trade scenarios I just gave you. That's our plan. Like I said, I'm not in love where the price is. Not at all. I like the NASDAQ setup better. But this could just be blah, like in the first hour and a half, and then it's just going to die. Okay? Unless there's a catalyst from news. Okay? Unless there's a catalyst from news. All right? Now, again, not sure if I'm going to go live today, but I definitely will give commentary in my Discord, Confluence Trading. Click on the YouTube homepage to join up. Interact with me. Ask me questions, okay? I enjoy answering the questions about the market, so please do so. You can see me in there. If not, the markets are closed tomorrow. So then I'll see you guys Friday morning. All right, everybody have a great day. Stay green. No trades.